All right, it say we are live. I'm gonna jump on TikTok.
Yay.
What is this title? New inflation rates.
Yep.
Okay.
Yeah.
Did we? Okay, I'm looking through here now.
Okay.
It did increase the rates for the EIC, right?
Yes, it did. And I'll put that one in the chat in case. Let me see. Let me do it like this.
Hello, hello, hello. We are just allowing people to come on in a moment before we go ahead and get started. We do have a couple of tips for you guys today on this Tax Tip Tuesday. You are getting some new rates for 2023. So, Shayla, you're going to show your screen, right?
Yeah, I can do that.
We're going to show you guys the screen, share our screen today so that way you can see some of the new rates that are coming out for you for this upcoming tax year. That's what I'm going to put new tax rates. Oh, let me cut this off. This phone has been off the hook today. I don't know why today feels like a Monday to me. Like Mondays are kind of crazy and there's a lot going on and happening. Today,
yeah, it does.
One of those days. It's Tuesday.
Yeah. Yes. Today definitely feels like a Monday.
A lot going on.
Yes.
Lot going on. All right, guys. Let me get back on TikTok. New tax rates. New tax rates for 2023. That's what I'm gonna make the title.
Okay. And let's see. I want to get those EIC. They don't have those available.
Hello, Patricia. How are you today? All right. So now we are on TikTok as well too, Shayla. So
okay. Hey TikTokers.
YouTubers. I think we are on Facebook as well on a business page and maybe my personal page. So hello, welcome. We're gonna go ahead and get right on into it. Today for Tax Tip Tuesday. Shayla and I are going to go over a couple of things regarding what's going on new in the tax industry. Pretty much what we want to start off with right now is you guys are getting new rates. Okay, it's what we want to call it. New rates for this upcoming 2023. And should we have the screen up at the same time while we're going over?
Yeah, I was trying to get my camera. I'm gonna see if you can see my screen.
Okay, yeah, you are a little blurry.
Okay.
If not, I have the page up too if we need to, but I could see. Let's see how yours look.
Okay, can you see my screen? I can turn my camera off if I need to.
Let me open it up and make it a little bigger. Okay, yeah, I could see it. I'm looking at it how they could see it possibly.
Okay, is that bigger?
Yeah, that's
better.
Yeah.
Okay.
Yeah, that's better.
Okay. All right, guys. All right, so these are just the rates right here. I'll just start right here and just keep it right here.
Perfect.
Okay. That way, for those when we're talking about percentages, they can know, that these are not for everybody, but these are just the rates depending on, what income rate that you fall under. This is the tax rate that you'll be taxed at, because a lot of people get confused about that.
So what you're showing right now is marginal tax rates for 2023.
Yes. So for those of you guys who don't know, depending on the income that you make, you're taxed at a certain percentage. And most of you guys are going to fall within, we'll start at the bottom. Most of you guys are going to fall within that 12 to 32% if you make, that income. But just to paint a picture, right here where it says 12% for income over $11,000, what that means is, if let's just say if you made $11,001 or more, you're going to be taxed at this 12% rate. If you make under $11,000, you'll be taxed at the 10% or $1,100. So a lot of you guys just don't really know like how that goes, and how that goes is let's just say the first $11,000 of your income that you make, you'll be taxed at that 10% rate. Anything over that is going to go fall into the 12%. Anything over this, when you go to the next one after the 11,000, anything over 44,000, you're being taxed at the 22% rate, and you just multiply that. So this is just to kind of give you an idea of when you're seeing, your W-2s and you're looking at the taxes based on your income. This is how your company, as well as what you're putting on your withholding or your W-4 form, this is how you guys are being taxed. And we're talking about this today because this is going to help some of you guys. So I did email you, Patrice, that side by side we could make a comparison for you guys just to see the difference in them. But these right here, guys, what we're talking about is just pretty much the rates or the marginal rates for how you as an individual get taxed based upon the income that you receive for the year. Does that make sense, Patrice? Oh, let's see. Can you see it now? I don't know if you could hear me or anybody. Can you hear me, Patrice?
Oh, sorry, I forgot I had went on mute.
Okay, gotcha. All right. So I didn't know if you wanted to add anything to that, but I just kind of wanted to explain to them just how pretty much any individual, depending on, the amount of money that you make, how you are taxed.
Right. And so, I mean, most people probably don't think about it like that when we're saying marginal rates is probably not clicking. So if we go up to the sentence, the paragraph above where it says the standard deduction, they'll probably understand more with that because they're used to knowing standard deduction versus itemized deduction.
Gotcha, guys. Yep. Yeah. Got you. So standard deduction, let's just talk about that for a minute, guys. So a standard deduction is a deduction that you're automatically going to get depending on your filing status. It has went up too, but a standard deduction is just a deduction that reduces a certain rate based off the income that you make, based off of your rate of income that you make. So for example, as you can see, it says the standard deduction for married couples filing jointly for tax year 2023 rises to $27,000, up $1,800 from the prior year. So a lot of people, you guys who are married, a lot of you guys don't like to file married. What this tells me is that the IRS is kind of giving you guys a really good amount up $1,800 is that's a lot for a married filing joint couple. So I would just say that if you are married, this will be a good year for you guys to probably think about filing together, because a lot of you guys, you think just because you're married and whatever situation you have going on, you may not need to file with your spouse, but in all actuality, you should be filing. If you're married, you should be filing with your spouse, unless there's other situations going on, and you could talk to your tax professional about that. But for single taxpayers, yours is standard deduction is going to rise to $13,850. So basically, up until that point, you're automatically not going to have to worry about the taxes or anything up to that amount. So that's a good thing to me. So it looks like what they're doing is they're just actually going in and giving us all a little bit more room, a little bit more wiggle room, just basically due to inflation. It's not a lot. I know it doesn't sound like a lot, but anything does help. So that's pretty much where you get the standard deduction. And the difference between the standard deduction and itemized, for those of you who don't know, you may a lot of times hear the word itemized. When you're itemizing things, that's basically where you're taking a lot of expenses, allowable expenses, and you can deduct those expenses, and you can itemize them and deduct them. But some of you guys who don't own homes, who don't have a lot of ownership in things, you may not be able to deduct certain things. So the IRS is going to automatically give you this standard deduction to go up against your income that will help to equate how you're taxed or whatever. So that's pretty much what I wanted to say to that, Patrice, about the standard deduction.
Okay. Yeah, and like I said, I just was kind of bringing that up because I know people don't really pay attention to the marginal rates, especially if you're not in those other tax brackets. They just may or may not understand necessarily what we're saying with the marginal rates, but it's okay. We still got in the information. What other parts on here maybe do you want to go over with? Didn't they also increase like the
earned income credit?
Okay, and I was gonna also say maybe like the mileage as well too. But let's earned income credit because that's something that a lot of people are familiar with.
Yeah, so just to shed a little bit of light right here, you can see that for anybody, let's just say if you have 3 or more qualifying children, last year you were able to get up to $6,935, but that's going to go up to $7,430. And I think I have a chart that can kind of show, this is actually from tax year 2022, where they had already made these. So here were the numbers right here where I said if you had 3 or more qualifying children, these were the amounts that they were going to have. But as you guys can see, what we're talking about today is they're making changes due to inflation. So they're making adjustments rather. So these are the numbers you may see right now because this is what's on the IRS website. But keep in mind, they have actually made some adjustments for the tax year. Okay.
For the upcoming year, so they'll increase from
exactly. And I can pull up a side by side to kind of give them.
No.
But that's pretty much.
I was saying that to you. I was talking about for my community, like the posts and stuff. I think, I was doing that for today. Yeah.
Got you. And then you said something about mileage. I
saw at the top. I think it's the very top of the paragraph. I saw right there. What was that?
So looks like
okay, no, that's not mileage.
Yeah, this is for commercial buildings. This is that is for like businesses where they kind of increase that deduction for certain properties or whatever. The mileage, we talked about that mileage. The mileage is up. I think it went up to 60 something cents compared to 50 some percent, but those are for business owners on the mileage part on that.
Right. Okay.
Yeah.
You're right.
So that's something for you guys to be on the lookout for. A lot of these things, guys, is pretty much when you give it to your tax professional, they're putting stuff into the system and we're making these calculations and doing the things for you. But it's still good for you guys to know whenever there are some changes coming in. Because it does affect you. It affects your refund amounts for those of you guys who fall into those income brackets and you're used to getting a certain amount of income. As you know, a lot of the things, some of you guys who got those larger incomes, that's not going to necessarily happen this year. But some of these increases, you will see a slightly larger increase up from 2019 tax year as opposed to 2020. Well, this 2021, because that one was just a whole different one based on stimulus, advanced child tax credit payments, and those are gone. So it's a lot of things. But I did want to show you here, Patrice, there are some things that is unaffected, which is going to be the personal exemption. A personal exemption, guys, is just an exemption that we all used to get, but then they took it off and we no longer get it. It's going to remain that. An exemption is something that you'll get for, let's say if you have dependents, those dependents can work as deductions and go against your income as well. And then as you can see for 2023, as in all of these years, there is no limitation on itemized deductions, as that limitation was eliminated. So we just talked about deductions, and I talked about things that you could itemize, like your state taxes, if you pay state taxes, your mortgage property taxes, those types of things. There's no limitation on what you can itemize. So if you guys are homeowners, you pay in property taxes. Some of you guys may pay city, state, county. Some of you guys may have had a large medical bill, or you guys medical coverage and things may have went up. You may need to sit down and take a moment and add those things up to see if those are more than these amounts that we talked about for the standard deduction. So that's why it's important to know the standard deduction, because some of you guys may be thinking, well, I already get a deduction anyway. I'm not going to go through my bills. But sometimes it is worth going through each and every one of those things. And that's why you should get with a tax professional, because we can tell you the things that you can and cannot deduct. So that's something that's just good to know. Okay. And then looks like the modified adjusted gross income amount used for joint filers to determine the reduction in the lifetime learning credit. That's a school credit that some of you guys may be eligible for. It's not adjusted or anything. And there'll probably be some more things that come out, Patrice. But these are just some of the newest things that they're coming out with right now. And then this is totally off topic, but I just see it over here on the left about tax scams. Guys, you want to be on the lookout for emails and different things that come to your inboxes and stuff like that, because there's a lot of IRS scammers out there on the rise right now. So that's just something for you guys to
rise right now.
Yeah.
So, big rise.
Big rise. And we'll talk about that. I think that's something we should talk about, on maybe later, but it's happening to tax professionals and taxpayers across the board alike. So yeah, but those are just those numbers. We're going to talk about it more. I think that's a good thing that the IRS is trying to do to, make those adjustments to help some folks out. Everybody won't be, it just doesn't work like that, Patrice. As you know, the higher you make in money and income, sometimes you don't get those tax breaks, but there are tax breaks to high incomers. We know they get those as well too, especially if they're business owners. So that's just kind of something that's, just kind of like in the news right now.
Right. And then also, if you guys didn't know, it's not necessarily a tax topic, but if you didn't know, like right now, your student loans are on hold. Three of your Republican, I think, governors have filed lawsuits against Biden and the administration. So your things are on pause, but still submit your applications. I think before, when I got on the other day on TikTok, they were asking. And so you still want to go ahead and submit your application. I went on to the site today. They are still accepting applications. They're just letting you know that they're not processing them right now. They're kind of on halt. But once things get back up, you want to have your application in there. What else you got, Shayla? You said you wanted to talk about like the end of year filing. I think you had mentioned that.
Yeah. So here's some tax tips for some of you guys for end of year. A lot of you guys forget, that you went exempt. Some of you guys, you want to go exempt for 6 months because you want to hold on to some of that money. And I promise you guys, we understand, we've been some W-2 earners where you just got to hold on to some of that money because things are tight. But if you forgot to go exempt and you know that you were not expecting to go exempt, you want to go ahead on, get with your human resource department or whatever, and just say, hey, I want the maximum coming out. I think it's October 25th. So you got maybe 4 or 5, maybe 6 paychecks left in the rest of this year. That could help save you a liability right there just by going back in and making some adjustments to your withholdings. A lot of times I had a client this year, just not getting it. They had a huge pay increase and they switched jobs, Patrice. And that pay increase was like $50,000 more and they didn't have any taxes coming out. And this particular client is used to a $8,000-9,000 tax refund. So for now, for me to have to tell this person, I'm sorry, you now have to pay money in, that was a huge eye opener. So if some of you guys out there have not, you've not remembered that you needed to go back and do some adjustments to your withholding, you still have some time. Go and do that. For those of you guys who are out there, you make contributions. Now is the time for you, if you want to get some money out of your hands so that you don't get taxed at the end of the year. This is where you want to kind of start donating. You can start making donations to charitable. Make sure that these companies, though, are reputable 501c3 companies who are nonprofit organizations. Particularly if you're making cash donations, make sure you get a receipt for that, because that's something that the IRS, they do check for those types of things. So make sure that if you're making cash donations and non-cash donations, that you're always getting your receipts, because charitable donations can actually save you at the end of tax year when you're making donations. And it's all types of other things that you can do. Maybe Patrice, that's something we could do another live about, maybe one day this week or something. We could talk about some year-end tax savings, because a lot of people don't think, like right now, even in the midst of going towards the end, there's still things that you can do with your paycheck to keep you from having to owe a lot of money at the end of the year.
Right. That's actually a good one. Maybe we should do that. If you can hear that lawnmower in my background.
No, because there's somebody out mowing.
Lawn care people out here, and
getting on your nerve.
Yeah, so I'm like, okay, hopefully this is not distracting, or I would have went on mute. So
no.
But yeah, I like that idea, because like you said, even for businesses, especially for our business owners, right?
Mm-hmm.
Like you said, these kind of things, donating to reputable charities and events that can give you that 501c3 letter at the end of the tax year, that helps you. All right, that kind of stuff helps you. So, and like she said, there are other things that you can do as well, possibly to help with that tax liability, right? And so, what else did we mention? We had said something else that we wanted to go over to before we.
Yeah, what was it?
I know we hit all the points we really wanted to. I didn't write down nothing today.
It's okay. Yeah. I actually for your
today we just on this sucker for y'all. Okay, we're gonna keep it.
It's okay. Before the people in the community, I do have a year-end planning guide for them that I want you to put in. This is just for people in the community, though. We'll give them a year-end planning guide that we can just put into the community in that group.
You say you'll give them a year-end guide?
Yeah, but just for the people that's only in the community, in the community.
Okay, in the lab.
Yep.
Okay.
Yep. So I don't know. I think that was it that we wanted to talk about. Taxes, inflation. Oh, I think the last thing was about we said it about having a finding a theme, but the Tyler Perry situation with the accountants. Did you hear about that, where he actually fired his accountants because he found that the IRS in fact owed him $9 million?
Yeah.
So I found that to be just one of those things where it can show you, like, no matter how high up you are in finance or whatever, or money, celebrities, we've seen it. We've been to a lot of events and stuff, and we've heard a lot of these celebrities say, we get played just like everybody else. We get bamboozled for just like everybody else. We don't do our research just like everybody else. But the only difference is they have to pay hundreds of thousands to millions of dollars as opposed to us. But I'm sure some of you guys may have saw in the headlines that Tyler Perry, he spent hundreds of thousands of dollars. The IRS had audited him for, I want to say, 3 years back to back. And I want to let you know, guys, sometimes when you do get audited one time, they're going to look at your tax returns for the next 2 to 3 years, because they want to see, are you doing the same thing that you did the year before, the year that you got audited? Because they know people, you like to get greedy, or you like to do certain things and you get good at it, and that's what you do. But that wasn't irregular to me that they would go after the 3 years. But The issue was that he found that $9 million belonged to him in a refund from the IRS. And you spending all of this money. Go ahead, baby.
I was gonna say also in that article, it did state that that was an IRS agent who was gun ho on him,
Yes.
on who was actually trying to get him caught up because he was trying to figure out what Tyler was doing and spending with his money. So let's add that.
And that agent was replaced.
Agent was specifically targeting and attacking him for those 3 years for that, and every single thing he passed with flying colors, which is why the IRS owes him $9 million. So thank you to that agent for being a a-hole, but you ended up paying him money back at the end of the day, right? But yeah, that 3 years, I just wanted to add that in there. That was an agent who was actively trying to find some wrongdoing in his particular business. I hope that agent kept that same energy with a lot of these white corporations, but I'm sure he didn't. Okay. But I'm so glad to see that $9 million that IRS owes Tyler back.
Yeah, and actually I did see where that agent got actually replaced by the supervisor. And I want to let you guys know, just, regular folks like us, you do have what's called taxpayer bill of rights. We all have rights. We all have reasons. If the IRS questions us, we can question them. You don't ever want to go at an audit like that alone and by yourself. You want to have people who can represent you because they know. And I will tell you, the IRS, they will use body language against you. They will use just from the slightest thing of what they're saying. So I commend Tyler Perry for that, because like he said, he's had to spend a lot of money on outside people just to help him through this. And this is specifically why you as a taxpayer, when you're paying in taxes and you're hiring tax professionals, this is a reason why you need to be with somebody who is reputable, knowledgeable, and they are expert in what they do. And I'm gonna just be honest, Patrice, I'm not trying to say it out there, but a lot of people who focus on this, are you a CPA? Are you an accountant? A lot of times people, they just think CPAs and / accountants are the go-to people for taxes. But as you know, that's just not always the case.
No.
The majority of CPAs that I know, they hate doing taxes. Or they don't like them, or they're not the best at it. Yeah. So a CPA, guys, is a certified public accountant. They went to school for something totally different than what a tax professional or an enrolled agent or a certified planner or anybody else have went for. So a lot of times, I just want to put it out there on the waves, a CPA is not going to always be your best person. They can represent you well because they're good with numbers and financials, but taxes, I just don't get that whole are you a CPA thing when it comes to taxes. And I think it's just a lack of ignorance on people's part.
And I just explain to people the difference. That's all.
Yeah.
Because when people ask for a CPA, that's exactly what I get them the definition of. Are you looking for someone to audit your accounting and your books? Or are you looking for somebody who's usually specialized in tax law and tax knowledge? Because I've said it before, every CPA is not. And so if you're going to work with a CPA, just ask the CPA, are they specialized in tax law and tax knowledge? A reputable one would tell you, nope, that's not really my thing. Because like you said, over 60% of the CPAs that I personally know do not like taxes, do not deal with them in taxes. And so it's different. An enrolled agent who's licensed by the IRS in all 50 states can work with you. They are experienced tax experts. They know the tax laws in and out because that whole exam is on taxes. You get what I'm saying?
Yeah.
So same way with a tax attorney, right? They're specialized in taxes, tax law, tax knowledge, right? And that's what you're seeking when you're trying to go and get somebody who's serious with this whole tax thing. So when I saw that article, I knew right away, yeah, he was going to a CPA firm. Maybe he should have had a few more enrolled agents or tax attorneys on his team, because again, CPAs are not usually the ones that are the best for tax experts advice, in my opinion.
Yeah, because as you well know, most enrolled agents and tax attorneys, their focus is focusing on representing that client. And if there's paperwork, tax returns that are needed, that are due or amended, what are they going to do? They're going to push it to the tax professional. They're going to hire or outsource that piece of the work out to the tax professional. And they'll tell you that, especially tax attorneys, and enrolled agents, most enrolled agents, their focus is on the representation and the resolution part of it. To resolve this, they're going to look at your taxes, and they can find stuff. But it's just like the mechanic. I always use it. You may own the mechanic shop, but you may have somebody who specializes in oil changes, somebody who specializes in foreign cars, somebody who specializes in brakes. It's all moving pieces and parts to this financial realm. And that is dangerous for you to always just think, just because you go to a CPA, that you can't get audited, you won't get audited. Yeah.
Yeah.
So I had to just say that like that, because I think it's just, like I say, it's just a part where you have to educate people and just let them know, the differences between what each organization or what each, designated area licenses holds and does. Yeah.
Yeah, for sure. Like you say, it's just education. Not knocking our CPAs. We love our CPAs.
Yeah, we love our CPAs. Y'all get us our financial records, sign off on them documents,
all that bookkeeping, that accounting, because we don't like that part. We focus on the taxes. That's why we bring it together.
Yeah, they the paper pushers.
Right? That's, hey, I value my CPA, but my CPA do not stick with taxes. He will call me for a tax answer before he goes figuring out some stuff himself. You get what I'm saying? So that's all. That's all.
Yeah. But that's a beautiful thing about having a team like that, though, having a whole network of CPAs, EAs, and things like that. That's the beauty of what we do, because we have those specific, like bookkeeping. A lot of people don't know bookkeepers are highly, highly effective in having accurate tax returns. I value bookkeepers to the max.
Yes. Yes. For sure. Do we have any questions at this time for anybody, or would you like any question answered? I think we got one from Pam Brown on Facebook. Says, does church have to have a 501c3 for you to claim donations? Most churches are kind of, are supposed to be set up as a 501c3. And usually the church is also supposed to give you an end of year statement as far as what you paid in donations. So once you get that statement, you get that piece of paper in hand, then yes, usually that's how the process works. You can claim the donation. But that's again what we're talking about, is that paperwork. So when you are claiming that contribution, you need that paper trail. So your church should be giving you an end of year statement of what your donations are. My clients bring them in all the time from their churches. I know I get one from New Life of what I donated. So you should definitely be getting a statement from your church at the end of the year with what you donated. And then that way you can claim that as the deduction.
Correct. Mm-hmm.
Sheila, you are too funny. Thank you. She said, thank you for mentioning to keep doing the Biden-Harris application.
Yeah.
He was talking about us talking about Tyler Perry. She said, I saw that. I would have fired that tax guy and called Patrice LOL Peaches. Gonna get you all the way together. Girl, I'm working my way to get up on that Tyler Perry $100 million tax level. But don't worry, I got some people I can refer you to, but we coming. Don't worry. I definitely see myself doing $100 million taxes real soon. Seriously. Especially for our African American entertainers and athletes. My dad told me that years ago. My dad had his PhD and his CPA, and he had his PhD in accounting, and he had a couple of athletes when he worked from Florida A&M that he did their accounting and their stuff, taxes for the Atlanta Falcons, right? And I remember him telling me that. I used to tell him, like, Dad, I want to help the community. And he always used to tell me, like, if you really want to do something, I'm going to need you to tap into some of these athletes and entertainers, because they really do not have a real solid place to go of people that are for them, right? Because they have all of these different other nationality of people around them, pushing them to agents, pushing them to their lawyer, pushing them to their accountant. And most of these people, when they actually go through the books, find out that a lot of money is missing, right?
Yeah.
Chameleonaire had a video out on TikTok saying how Jay-Z sent him to his accounting firm and CPA because he was missing about Chameleonaire was missing about 600,000.
Yeah.
Right? And so it's stuff like that. So these athletes, rappers, and entertainers are out here and they're being pushed in front of people who a lot of these people are getting over on them, right?
Yeah.
So that's the biggest thing. But yeah, I definitely see us doing that.
Yeah. Agents, athletes, celebrities, they have like agents, accountants, and they'll tell you, once you see them, like making documentaries or stuff like that, and they'll tell you, all that money that y'all hear that we have or whatever, we don't have that money. We don't, once we pay this person, that person, this company, or that, they down to, whatever. And that's why we don't need to get caught up in the hype of the image of what these people, actually look like, wear, and what they do, because, they lead real lives just like how we do. You know what I'm saying?
Yeah.
So yeah, but yeah, but that's pretty much, huh?
Yeah, my battery is about to die. I'm gonna have
Yeah, I know. That's why I was like, it's pretty much it, guys. We just wanted to bring you some quick little information today. Want you guys to have a happy Tuesday. I don't see any more questions or anything, Patrice.
Nope, I don't either.
Okay. All right. So we're gonna let y'all skedaddle and get up on out of here and get y'all Tuesday on. And you guys have a good one. Peace.
Peace.